Hey guys, it's Sasha. AMD just posted their Q2 results and, well, apparently it was really bad. The stock is down 5% in pre-market trading because AMD apparently really screwed up, and in this video I will tell you exactly how bad, how awful the situation with AMD is. I'm going to share my analysis with you, and boy, these numbers are horrific, so brace yourself. First up, I don't know how to tell you this because it is just so shocking, but AMD posted a revenue of 6.55 billion. Now, that might look good because it is their record ever revenue and because it is 70% up year on year, but no, there must be something in it. There are clearly skeletons in them closets. There is no way the stock would be down 5% if AMD absolutely smashed their earnings like they did last night, right? Well, the gross profit was $3 billion, up 65% year on year, and the gross margin has dipped slightly as AMD have just integrated the Xilinx and Pensando acquisitions. That's very normal and you probably would expect that. But if you look further down the table, you can see the shock and horror because net income is down a whopping 37% at $447 million. So the EPS came in at 27 cents instead of over $1 as analysts forecast before. Oh dear, I guess this is about as far as most of the analysts got, because further down in this report there are words and numbers and tables that explain exactly what's going on, but you actually have to go and read them to understand. So I guess most of the analysts didn't get that far. But if you are boring like me, you might actually want to go and scroll down to this bit that talks about the reconciliation from AMD's GAAP to non-GAAP operating income, and you can see that AMD amortized $1 billion worth of intangible assets that they got from acquiring Xilinx and Pensando. Throw in another $174 million in acquisition costs, and that is a one-off cost that doesn't really in any way impact future performance. And then remember the $259 million worth of stock-based compensation that is significantly above the norm for AMD and is largely related to the acquisition process, and you can very easily see right there that the operating margin net of these three factors goes from 8% on a GAAP basis to 30% on a non-GAAP basis. Now, I'm normally not a fan of discounting and throwing away all the costs and working on non-GAAP numbers because they can make things look way better artificially than the reality. But AMD has just gone through a once-in-a-blue-moon absolutely huge acquisition of Xilinx and a smaller second acquisition of Pensando at the same time. They just bolted $50 billion worth of goodwill and intangibles onto their balance sheet, so at a time when the numbers are completely out of whack for the company as a result, it does make a whole lot of sense to try and understand the situation a little bit better. Try to understand the nuances of why the numbers are doing what they are, because if you don't, you might catch the whatever brain debilitating disease it is that financial journalists seem to suffer from all too often, because AMD absolutely smashed it out of the park with these results. But the stock is dropping because people don't seem to understand financial statements beyond net income down, company dead, sell stock now. Okay, if you want to find out why the share price is down, you can just go and Google it. And the universal answer from all the major news outlets out there is that the reason is AMD's weak guidance. And of course, how could I possibly have missed that out? Because you see, 3 months ago, AMD's guidance for revenue in 2022 was $26.3 billion. And now, after posting this atrocious set of record-breaking Q2 results, AMD's guidance for 2022 has changed to $26.3 billion, give or take $300 million. And I don't know about you, but when a company drastically changes their forecast from $26.3 billion to only $26.3 billion, it really is time to panic. So now we have completely understood what happened with the stock price. Let's look at the financials in a bit more detail. AMD have now started to report their numbers using new, more detailed segments. We used to just have enterprise and retail, and now there are these new 4 categories. We've got the data center, which is processors and graphics cards that AMD makes for servers, things like cloud computing. And this segment now includes Pensando and Xilinx data center products as well. Then we have the client segment, which is the processors that AMD sells direct to retail buyers. Gaming includes graphics cards sold to retail buyers, and then also chips that AMD sells for the likes of Xbox and PlayStation. And embedded includes special chips made for dedicated systems, not off the shelf or semi-custom chips. This segment seems to be almost entirely made up of Xilinx embedded products. I would really prefer the graphics cards to sit within the client segment, separate from the semi-custom chips that AMD makes for games consoles. I think it would make the data a lot cleaner and the analysis a lot better, but hey, 4 segments is still a lot better than 2. You can see that the split in revenue here is fairly even. So there are 4 different core parts to the business that are all relatively important. The retail processor business is the biggest revenue driver and the biggest profit driver, but it is also the slowest growing out of the 4. Client revenue only grew by 24.5% in the last 12 months. I'm sorry. Only growing by 25% is a pretty funny way to put it. But I have been pointing out the fact that AMD's enterprise business is where the future value is for AMD for a long time now, when enterprise was a tiny component of AMD's total. But here we are, and the data center part of the business grew by 83% in the last quarter, clocking in $1.49 billion worth of revenue. And the embedded segment doesn't have historical data because it is largely there through the acquisition, but it does have a 51% operating margin. So here is where the ridiculously good news is buried. Data center and embedded are the 2 massively profitable parts of AMD's business. The rest of them are profitable, just not quite as profitable. And at the moment, those 2 super profitable parts of the business are also growing the fastest. And at the moment, they still only make up 42% of AMD's total revenue. But AMD's own forecast says that 60% growth that they're expecting to get this year is led by growth in the data center and embedded segments. So when you build out your forecast for the business, this is going to mean that the profit margins should continue to increase substantially over the coming quarters, which is a very good thing. And Dr. Lisa Su, who is the CEO of AMD, said pretty much the same thing on the earnings call. Now, let's quickly look at AMD's balance sheet. Following the acquisition, AMD has $5 billion worth of cash and another $1 billion in short-term securities. And there's another $4 billion sitting in accounts receivable. That's $10 billion worth of cash and things that are basically as good as cash. And then look at the liabilities. There's $5.5 billion in total for current liabilities. They have almost twice as much cash as current liabilities, so with a quick ratio of 1.82, and that is very good. Then there's another $2.5 billion worth of long-term debt and a bunch of other stuff for a total liabilities of $12.3 billion. This is a very strong balance sheet, and AMD spent almost $1 billion of their money repurchasing shares in the last quarter. So as a shareholder, you are beginning to see some really good benefits of the cash printing machine in action. There is a lot of really interesting stuff coming down the line for AMD as well. During the earnings call, Lisa Su confirmed that the new generation Zen 4 Ryzen processors are going to arrive in September next month. So this will be during Q3 and going into Q4. These are new processors that are using a 5nm node, which is a step change in terms of how many transistors you can fit on a chip. And with AMD's new 3D stacking on top of that, things could be very interesting, leading into the performance numbers and how that relates to people wanting to buy them. AMD was already absolutely smashing Intel on performance, but Intel is struggling with introducing their 7nm process at the moment. They have been battered last week with their own earnings, so it is looking like AMD is stealing a march and going to pull even further ahead on tech over the next couple of years, which should make for a very interesting end of the year and 2023 and beyond. AMD is also saying that their new graphics cards will be 50% better in terms of performance per watt, which is a phenomenal rate of improvement and could be an indicator that this next generation of GPUs will potentially match Nvidia. And if AMD produces cards that genuinely compete with Nvidia on performance, that could be a very big catalyst for the next 12 to 24 months. AMD is already absolutely killing it with their EPYC server processors, but the new projects, codenamed CNN Bergamo, are due to arrive in the first half of 2023, and cloud computing is growing at an absolute absolutely ridiculous rate. It is here to stay. That growth is here to stay. It is the leading growth segment for Google, Amazon, and Microsoft. And AMD is at the bottom of that giant cloud computing mountain, selling the picks to everyone going up there looking for treasure. So AMD being way ahead of the competition and pulling even further ahead indicates that this business is only going to get more lucrative. I have updated my own DCF model with all of this new data, with the new segments and the post-earnings business structure, and the fact is the Q2 performance was almost bang on my expectations. So everything is trending exactly as per my previous forecast, so my valuation really hasn't changed. I still expect to see substantial growth in 2022 and 2023 from the data center and embedded segments, and after doing all of the calculations, my target price is still at $200, which is a whopping over 100% upside on the stock, which is why it is in my portfolio. By the way, if you want to check out my models in a bit more detail for your own research to try to help you understand how these models are structured, all of them are available to team members, so you can go and sign up to my Patreon link in the description if you are interested. If you don't want the models, but you just want to join the conversation, talk about companies, talk about the stock market, talk about performance, all of those things, you can sign up as an Espresso member instead, and I will see you in the Discord. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.